So here we are, a short update now. Um, we had a correction. We had taken a short loss of $130. The US dollar dropped over 113.49, and currently we are now long again on the direction of the major trend, long for US dollar against the Japanese yen. Previously, we have been a short position, and it has been now confirmed the fears of Omicron has been erased, so the market is long again. There are of course some main fundamentals also play for the US dollar. Um, we have, for example, on the positive side, the Fed points to a faster QE taper, and higher rates are on the menu of 2022. Then U.S. economy is growing fast, accelerating tapering seems more probable. Then we have low future inflation and higher interest rates lift the real yield. And good news for workers is also good news for the dollar. Um, we have, for example, also the fact that Fed points to an earlier lift off, that Fed may hike as inflation is set to stay for a long time. We are talking about the growth hawkish story is the right one this time. The US dollar is shielded from the power crunch thanks to America's energy independence. Then we have many positive news of rising inflation in Japan, means inflation is building around the world. So that's something normal. Fed ramps up to their hawkish rhetoric. Stickier inflation increases the need for less accommodation, and of course that the Fed is in no hurry yet, but prepares to raise rates faster as maybe middle or the end of 2022. On the other side, on the bearish US dollar bearish side of themes, we need to keep attention on government and Fed to allow a steady US dollar decline to invite inflation. Then inflation won't survive a bear market, too aggressive prices of the Fed funds futures. Negative for the dollar is also the dollar's global use falls to 59.2%. And also dollar stores face branding disaster as unsustainable model is revealed. Then we are discussing the U.S. Government plans to default on debt, the dishonest way the Fed stands ready to print all the currency the government needs to pay its bills, or consumer sentiment is a warning that all is not well with the U.S. economy. The theory that 2021 inflation is only transitory has received a big boost, and also rate hikes are way off in the future. So we're discussing delta in decline. We're discussing Fed to separate tapering from rate hikes, or creating inflation to slow down Fed's Federal Reserve's tapering plans. So you gotta see all these facts are in balance, but on the other side, the US dollar is a positive sign to every ear. And the fact is, US economy is currently the most impressive and fast growing economy worldwide. On the other side, we have China, we have Europe, we have Russia, but there are just some stones on a mile. We need to keep also in mind to pay attention that US dollar ends higher on rebound in yield, in US yield. And on the other side, we see that we have a very targeted economy, targeted policy making in the United States, bigger, faster, better, America first. And that's exactly what is driving the US dollar higher and higher. So, and that's exactly what is driving the US dollar higher and higher. So, again, back to the market. We are long in US dollar Japanese yen. Our stop loss is at 112.99, and the first profit taking is at 113.98. We are trading the trend, meaning we put no profit target. We just trail our stop losses based on short-term support resistance levels. And currently it seems that the market is rising again, also thanks to the rising of crude oil, Brent crude oil, and also WTI. 115.61 and 112.53, 52, something like that, supported by demand for risky assets and rise in treasury yields as Omicron coronavirus variant fears subside. The dollar against yen is trading higher on Tuesday after reassuring news on the Omicron coronavirus variant drove up demand for risky assets. So also some very important fundamental data like Japan economic news. Japan's household spending posted an annual drop for the third straight month in October. So the pace of decline slowed as consumer sentiment struggled to stage convincing recovery after coronavirus curves ended. And in my last video, which was some months ago, I predicted also that we will see prices at yen niveaus at 120 to 1. It is really to understand, especially the Japanese yen second quarter recap, the dominant downtrend for the past months, maybe in 2023, whatever. But the difference between these two, right? If this is the interest rate, Japanese interest rates, which are declining or maybe stay steady. Then on the other hand, the US interest rates expectations are rising. So we will have then a bigger difference. And this is also a bigger difference makes the US dollar attractive. 112 and then 211. 15. My personal prediction is we will see 120 and possibly 125 yen for dollar soon, very soon. That level means that we will very soon see prices up to 120. So in the major chart we have around this area between 116 and 122 many major resistance lines. And so we need to keep in mind that it would not be an easy ride, but breaking over 118 means that we will see prices at 125. So